All right, good morning, everybody. Welcome to the very first Forex trading strategy session that I've led here at fxstreet.com. However, this is not my first time around at FX Street. I think it was May 2006 was my first, wow, was my first webinar at FX Street. So I'm really excited to be here for the 125th time, I think, approximately. And we came up with this really good idea because I love working with you guys. I love having you on my team. I love sharing with the community. And it said, well, you know what? We meet every first Friday of the month at 7:30 in the morning. So why don't we just meet every Friday at 7:30 in the morning? Sounds good to me. Does it sound good to you? We'll make this an hour of power. We can take this anywhere we want. We can do whatever we want as a community of Forex traders. Now, I thought perhaps we could talk fundies, and I thought perhaps we could look at longer term charts, perhaps focusing a little more on swing trades. Now, it's a little challenging doing that on a Friday. I'd rather do it on a Monday to do that, but why not? Why not do the challenge? Now, over the course of time, we can improve and adjust along the way and make this about you and your needs, not about some PowerPoint presentation I've made up in advance to make me look good. So we'll keep it live as possible. We'll keep it interactive as possible. We'll do whatever needs to be done to have a positive impact on your Forex trading. Give me an amen, brother, if that sounds good to you. I'm feeling really good. The coffee's tasty this morning. Anyways, my name is Wayne McDonell. I'm the Chief FX Market Strategist for Traders Way, an ECN that allows you to trade Forex, energies, metals, indices, and binary options. Yeah. And you probably also know me as the Chief Currency Coach of FXBootcamp.com, which is more than 10 years old. Uh-oh. Wow. All my MT4 platforms just went down. Wow. Excuse me. Look at that. Just like boom, 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 boom. All my MT4 charts went down. Interesting. I guess I should have rebooted, huh? Let me get another one going. Okay. So, oh, you know what? It was my browsers went down too. Wow, spooky. Okay, so just a quick update looking around the world. British pound currently is weak. Euro is moderate or neutral. Swissy is neutral. Yen is strong. Now, Nikkei just hit a 15-year high. 15-year high. What creates such a rally? Put it in another perspective, the Nikkei is up 180% since in the last 5 years. Quantitative easing. Thank you, Wyatt. Wyatt is really improving with this fundamental analysis. Yeah. Well, that's the whole point. This is what I've been saying with quantitative easing in Europe. Like, why haven't you been buying the European stock market? That's the whole point, is to increase asset prices. Well, anyway, increase Canadian dollar strength, or some Canadian news might be coming out. Anyways, I like to start by identifying things like support and resistance and psychological levels. This is US dollar versus Canadian dollar. Let me clear this up. Okay. A couple of things going on here, obviously, right? I'm missing a whole... My drawing tool's running, but I can't see it. Oh, here we go. So anyways, a couple of things going on. Obviously, we're in a pivot profit zone. I don't know if you could even see that. The color is not quite right. Let's, I guess we'll try blue then. We're in a pivot profit zone. Okay. And midpoint psych level. And CAD is stronger relative to other commodity currencies. So if you think that's going to continue, one thing that you might look for is to use this area that we're at now as a reversal zone. All right? So what you could do here is if you touch the midpoint psych level, right, then you could look for, an opportunity on a small time frame, like a 5-minute chart or a 1-minute chart, to scalp short. Opportunity number 2 is if that does work, you could use it as a more conservative entry. Wait for the lower low, right? And if you get the lower low, set up the lower high scenario for a 1, 2, 3. Okay? That's for possible Canadian dollar strength if we get it. If you think the Canadian dollar is going to weaken, then this is going to go higher. Problem with that is, it's got a lot of resistance up here technically still. Okay? I don't mind this going higher. It just technically doesn't look like it. I am now the host of the event. What? Am I still here? Everything is freaking out on me today. Yeah. Nice. Yeah, good. Well, did you see that window pop up? No, probably not. The window popped up, said, "Yeah, I am the host." I'm like, "Yeah, I thought I was." So anyways, another reason that this could go down is you could already play this on a higher fractal, right? I already drew this for the potential of this move. But on a higher time frame, you might already see that, and you might already have it planned, right? So you would have it planned already like this. Let's see. Sort of like that. And you can adjust it any way you want, right? So now you change the time frame, change the fractal of it. Okay? And you could have it like that. Notice it's overbought at a midpoint psych level at a pivot reversal zone. Jobs report? Sure. Sure, that sounds like it'd be important, right? So that's why you might want to set up the Canadian dollar. If you think it's going to be disappointing, then you are actually going to look the other way. That's why I said, I'd rather have sold the Canadian dollar low. Okay. So I can't really do that here, can I? I was supposed to do it here. So what are my choices? Well, either set up a trade the other way or wait for the breakout, wait for the retracement, and then try again. Whatever it is. It might do this. Okay? I just can't buy now. That's all I know, right? I might not be a smart man, but I know what support and resistance is. Anybody like to trade gold? Yeah, a week ago, somebody asked me about gold during the non-farm payrolls event, and I couldn't come up with one reason why you should buy it. Did anybody attend that event? I like that 2M3 for me. Good job. Yeah. So that was here. Right? So couldn't find a reason why you'd want to buy it. Nice to see it fall $50 since then. Cool. I still don't see why you'd want to buy it. I would play the psych levels if I were me. And to me, the next psych level isn't 1155. It's going to be 1100-ish. Maybe play the bottom in here, maybe. 1134 if you had to. Okay. Clearly something going on there, right? And gold is interesting because I think as we get closer to 1,000, people are going to defend it simply because it's $1,000. Not because it's logically worth $1,000, just because it's psychological. And then as we get closer, right, it's going to be exponentially more difficult to get it to 1,000. So to reach 1,100, I think 1,100 is going to be defended. Oops. Right? Man, I'm messing this up. 1,100. That's going to be defended as well. And I think would be very difficult. So that there's a line of defense there. Some fortification. So, I don't know. Yeah, so I think it's going to have a lot of difficulty falling, and I don't see any reason to buy it. Because it's not expensive, is it? So I can't sell it, but I don't see a reason why I should own it either. Okay. How about oil? Let's just drag our support and resistance areas. Add the lower one. So what did we talk about a week and a half ago? Well, let me give you a hint. When we were up in here, as you can see, we have identified it as a sell. We were talking about oil going down to $20, but let's just say 25. Why would we suggest up here that oil would go from basically $50 to $25 when it is already dropped 70%? That's right. We talked about that about 10 days ago, I think. 1, 2, 3. Well, over the weekend and stuff. So I don't know. Well, 1, 2, 3, 4, 5. 5 days, 5 or 6 days ago, plus a weekend in there, maybe even 2 weeks. So anyways, why? Not dollar strength. No, not necessarily. For example, let's look at it. Oil dropped from $100, right, to $40 in a very short amount of time. The dollar didn't gain that much strength. Contango. No, it just comes down to there's no more oil. There's no place to put oil in the United States. We have so much oil right now. We can literally, when it comes out of the ground, there's nowhere to put it. So, right? So the market is flooded with oil. So price cannot go up, can it? In the short term? Right. So the potential is either down or sideways. So that's what we talked about, early last week. How cool is that? So now you got the range, and now the breakout pullback, and maybe, just maybe, right? But again, it's the logical It's the logical decision-making process that I care about. I don't care about, how right or how wrong or how far or how fast. Yeah, so on and so forth, maybe. But that's what that's what some people have done. The last time oil dropped from what was it, $150 a barrel down to 30. They just left the ships out at sea for 6 months until oil went from 30 to 50, and then they unloaded it. But $20 a barrel extra is a lot of money when you for snow this year than Fairbanks, Alaska. So clearly they were not out shopping for the latest bikinis for spring. Okay, let's go to USD yen. How do you feel about this? First of all, based on this reaction, let me change the color again. Let's go, I don't mind blue. Okay, let's continue to build our confidence, okay? If not in our trading ability, then at least in our technical analysis. When you see this, does it give you confidence that professional traders and other market participants, or let's say a majority of market participants, are using weekly pivot points or monthly pivot points? What do you think, guys? When you see that, can you say, wow, that is why I use pivot points? See, building confidence is incredibly important as a currency trader, as really as any trader, because it's so easy to lose confidence, right? Have you ever been in that situation where you go from the world's greatest trader to a zero in like one trading day? No? Only me, huh? Wow. And I'm not even that emotional. Really? 100 people in the room? 95 people in the room? And no one's gone through that situation, huh? Guess I'm unique and special. Yeah, I must be unique and special. Very good. So anyways, there's an opportunity to build confidence in your analysis. So you can say, this is exactly why I use pivot points and why I respect pivot points. Then what does it do? It drops into the market for your opportunity to buy. And now we're actually consolidating. So now what do? You identify the bottom, you identify the top, and you range trade. If you're a bear, this is what, dollar yen? Okay, if you're a bear on this, one thing that you want to look for is the oscillator getting into the overbought zone and rolling over. Why do you do that? Because if it gets up here and rolls over, what the analysis is telling you, what the algorithm is calculating, is price's ability, if it's rising, price's ability to make a higher high. Okay? What will that show you? Your oscillator would look like this. Okay? All it's telling you is it's not making higher highs anymore. Now, if it's doing that and it happens to be on a weekly pivot point and just above that a monthly pivot point, and let's say somewhere nearby a psych level, right, or something, whatever it is, and that happens to be on a double top, do you think there's potential now for price to fall? The answer to that would be yes. So that's what you would look for. Remember to use your the tools that you have available. Make sure you understand what they tell you so that you could, if you understand, then you can use that information, not like you're waiting for this magical, 2 lines to cross. Who cares about that? The first thing that's important is, are you at resistance? Because if you're at resistance, you certainly can't buy, but maybe you sell. And why is it resistance? Oh, you say, oh, well, a weekly pivot point, monthly pivot point, psychological level. All right, so I understand why that would be resistance, both, technically and psychologically, let's say. Okay? So you're like, that might be a place where price reverses. And then it touches it the first time and it drops like a ton of bricks. And you say, yep, that's resistance. Right? Then what? We come back and test that area again. And you think, wow, we tested that area last time and it dropped like a ton of bricks because of weekly pivot point, monthly pivot point, psychological level. And now it's clearly a top. So now maybe a double top forms. Now what I'd like to see is an oscillator rollover that shows candlestick inability to make higher high. So therefore you get ready to sell. That's called a trade plan, my friend. Tactical entry. So let's take a look. Why is this resistance? Monthly M4, weekly M4. M4 is the conservative target for both weekly and monthly pivots. Okay? And the psychological level just happens to be 122. 0.000000000. And just above that, another reversal pivot just to help out. So, is that a possible resistance zone? Yes, sir. Right? Good. So now what do? Hey, wouldn't it be nice to see that go like this? You see that? Mendigas, you need the templates. Come on, how long have you been working with me, man? You should have yours by now, right? Should already have that stuff. Yeah, too long. Still haven't got that invitation. Was it Lithuania? I love Lithuania in the springtime. It's almost as nice as Paris. All right. So, I don't know. Maybe, right? But do I want to short the USD? No. So how about a yen pair? Give me a yen pair that you might want to short. Give me a yen pair you might want to short. Oh, baby, slow down. Yeah, it looks like that support zone on our pound broke, huh? Too bad. Nice thing is the pound dollar, what was it, 600 pips we had that lined up? I think we're even farther than that, but anyways. Let's clean this chart up a little bit. Okay. So maybe you short that sucker, right? So if USD yen, for example, does this, what will this do? Okay. Got to be a little cautious because we pulled back to the 55. You're going to need to be worried about the double bottom. So what I would like to see is, I would scalp this, take profit at the double bottom, and if it breaks, sell the retracement retest. Okay? I'm conservative on this one because of the entry here. If it was running off the 21, I'm aggressive. There's no bottom. Okay? If the 55 is in control, we're going to test the bottom. Okay? Doesn't always play out that way when the fundamentals are in control, because I would have been worried about that here. Never happened. Doesn't mean you don't play it smart. Okay? I would have been worried about these pivots. Absolutely, for sure. Okay? Okay, zoom in here. On the 4 hour, look how easy this one is. Down to the 21, down. There's our little oscillator getting ready to do our thing. What's it showing us? Watch, let's go through this. Lower low, lower low, lower low, lower low, no lower low, no lower low. Look what happens to the oscillator. It starts coming up, right? Almost even crossed. And then lower low, lower low, lower low. Oscillator still now oversold. And then what? No lower low, no lower low, no lower low, higher high. Look what happened to the oscillator. Boop, 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 boop. Now it's coming up. Higher high, right? Or how about reverse? No lower low, no lower low, right? It's kind of the, right? So anyways, now we get up here and we haven't been making higher highs, have we? So what does it do? It starts to roll over. And then lower low, almost. Now, maybe, probably. Okay? And your job as an aggressive bull is sell off the 21, like you did here, like you did here. That's the whole point. How or why we even have the oscillators on the chart. Okay, the 2155. The whole point of using the 2155 is to sell. If you sell off the 21, which is the orange line, that's your aggressive line. That's where you sell, and if that holds, there's no bottom. Okay? When the 21's below the 55, and you sell off the 21, there's no bottom, guys. There's no support anywhere. Now, maybe pivot points and stuff, right? But you're aggressive. You're confident. You certainly wouldn't be buying. Okay? Okay? So it's sort of like your cloud, if you will. If the 21's in control, you're bearish, you're aggressive, there's nothing that can stop you. Okay? Now, if price goes to the top of that, yeah, you know what? You're still bearish, but there's going to be a bottom, so now you got to find your support. Right now, that doesn't exist. You're a bear on this 4-hour time frame, and your target is going to be very low, technically anyways. Psychologically, you know, it's going to get complicated, right? But anyways, I guess we can call this a 382. It's pretty close. Okay, it's pretty close. It's not exact. Let's call it a 382. 382 predicts a 1618. We're looking at make a 382. The psych level kicked in. So the entry is about 29. The target is about 125. Potential here for next week, 400 pips. Okay? I use the MACD, Marina, for the 2155 to identify overbought and oversold conditions for the market. Let me show you. Insert. Now, I don't like the one that comes with MT4. For some reason, MT4 comes with the only MACD I've ever seen with one line. I didn't even know it existed before that. Gerald Appel, the inventor of the moving average divergence convergence indicator, Let me get that right. Moving average convergence divergence indicator. He's the one that taught me how to use MACD, and I don't remember him using a one-off MACD, but anyways. All right, so inputs. Okay, 21, 55. Why? I'm identifying the overbought and oversold conditions for the 21 and 55 EMA. Okay? Moving average convergence divergence. What does this mean? It means you have these two moving averages. Let's do them, right? If they're converging, they're getting closer. If they're diverging, they're moving farther away from each other. That's all it's doing, is measuring two moving averages. And then I think creating a moving average out of the distance between the two moving averages. So it's a moving average between two moving averages. I don't know. Whatever. What it's telling you, if I put 2155, it says, look at the 2155 EMAs. Okay? Over what period of time? Now, I like Fibonacci numbers, so I'll move it from 9 to 8. It probably makes no difference whatsoever. Okay? So what it says is look over 8 periods and look at the distance of the 2155. Are they getting closer like they did here? Or are they moving farther away like they did here? Okay? So you plot that. Just to make it everything congruent, let's do the colors. Okay, red, or, right? Blue. It's not blue enough. Let's get a bluer blue. Let's get a nice pretty blue. Where's blue? Medium blue? Better. I like just a nice blue. There. Let's try that. Let's make it fatties. Fatten her up. Okay. And boom. Cool. So there's another useful piece of information with your moving average convergence divergence indicator. And that's this area with the histogram. The way I use it is I look at it as a water line. So you see the 0, 0 here? Key. Okay? So all of this is trying to tell you a couple of things. When MACD is pointing up, the two lines, your two moving averages, are getting closer. Okay? When they're pointing, when this is crossed down, and I mean just 21's below the 55, the 21.55, they're moving farther apart from each other. The fact that we're below the water line simply tells me that the moving average on this time frame, the two moving averages, have crossed down. Okay, so right here, the 21 has crossed below the 55 on the 4-hour chart. I can tell you right away. Okay, they're falling, the two moving averages are widening. They narrow a little bit, then they widen a little bit, narrow for a little short bit, widen, okay, and now they're narrowing a little bit. That's all it's telling you. So for example, if you get a, oops, come on now. If you get a MACD that's going like this, all it's telling me is that the two moving averages are getting closer. They're narrowing. The distance between the two, they're converging. Okay? Now, if one crosses above the other, this MACD will be crossing above the waterline. That's all it's telling me, guys. Awesome. So, if you gave me a blank chart, okay? If you gave me a chart that had no MACD on it, I could draw the MACD for you. I could take out a pen and paper and I can draw the MACD for you. I find it easy. So very often I don't even use MACD anymore because I can see it within just a quarter of a second. I already see it on the chart, and I just by calculating it with my mind. I'll tell you what. So like here, this is the 2155 cross, somewhere in there. Okay, that's it. I mean, why do I need to waste chart space? Oh, look at that, right there, right? When do they narrow? Well, let's mark that, right? Narrows here briefly, then what? Narrows here briefly. Oops. Now, in a bearish market, do we care when it narrows up versus down? One way you could use this is only look when it crosses down for an opportunity to sell. You're not concerned with crossing up because you're already looking to sell, right? So these might be selling opportunities is another way of looking at it. All right? Oh my gosh, is it 8:16 already? You started at 7:30 to 8:16, right? I'm supposed to be done. Wow, does that go so fast? Amazing. Well, at least we got an impromptu overview of MACD. I wish I would have prepared something better, but I hope you walk away with at least a little bit better understanding of that particular oscillator. Now, the importance of this is understanding the tools that you use so that you can use the tools to make important decisions. Why do I customize the stochastics and the MACD? Because I understand what the algorithm is doing and calculating and trying to show me. And then I take it a step further and say, well, what do I want it to show me? So I look at the market and say, I want to know when the market is technically bearish. So I'll use MACD, the market now, right? The sort of the medium-term move. Because I know the market could be down for the day, but there's plenty of times when prices are going up, even though the market's still down. Price and market, there's two different things. So I'll look at the MACD and I'll say, well, I need to know overbought and oversold conditions for the market. So I say, well, what do I use to represent the market? I use the 2155 EMAs. So I'm like, okay, so I'm going to change the MACD to 2155.8 because I want to know the angle and separation between the 21 and 55 EMAs over a period of 8. And then I'm like, well, if I know the market conditions, I'm going to need to know price conditions, and therefore I need, and for price action, I use the 5.8. So I'm like, okay, I'm going to use stochastics now, and I'm going to change it to what? 853. Now, that oscillator tells me overbought and oversold conditions for price action, while at the same time I'm looking at a different oscillator to tell me overbought and oversold conditions for market. And ideally, when MACD says the market's bearish, I'm selling stochastic oscillator crossovers in a down market. Easy, right? Sir, there is an ABCD pattern on cable daily, a point on 7 to point blah, 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 point C, blah, blah, blah. Is this fib valid? Well, on that one, I set it up like over probably a week and a half ago for a 500 or 600 pip drop. So I don't know what you see, but you can look at it in various, we could look at the same thing in two different ways as long as you think it's going to fall. But to be looking at it now is a bit late. Let's see. Okay. Our short on this was here. So your ABCD pattern, I don't know. Sure. Your numbers are different. Well, look, I don't know what you see or the value of an A B C D E F G H I J K pattern. This is previous resistance that even a blind man can see. So when you retest it in a bearish market, you sell. Call it whatever you want to call it. I also called it a 618 Fibonacci retracement. The 618 Fibonacci retracement predicts a 1382, and that puts us down here. Okay. So we sold at 56 with the target, right? 5,600. Sorry, let's just get the whole thing, right? We sold at 156, or actually 155.55, right? With the target of 146. Now, when I set it up, I needed to be conservative. So we looked at this conservative area and said, you know, the minimum acceptable performance for this trade plan was like 500 pips, but it had 1,000 pip potential. Okay. But clearly I need to be worried about this support zone, right? I'd be a fool to ignore this, right? You see that? So like whatever you want to call this entry, an ABCD, or if you want to call it like, look, a drop, a fib retracement and sell, call it whatever you want, right? It's all good. I mean, there's just tons of obvious resistance in here. Okay. 43. Okay. So yeah, so I'm only doing, you know, what's my target? You know, it's like, it's not me. It's just technical analysis. What does technical analysis say? If you consider that a 618, the 1382 is the extension. I mean, so it's not me. I don't have an opinion. That's just technical analysis. So I like to use the analogy, you know, I'm a concert pianist. Doesn't mean I can write music. No, I think I can. But, you know, in a simple world, right? I can't write music, but I'm an expert at reading music. So you can put down sheet music in front of me with all kinds of squiggly notes all over it, and I can play it like the master himself. Right? I can play Mozart, but I ain't Mozart. I can play Beethoven, as good as Beethoven, probably better than Beethoven, but I ain't no Beethoven. So, I don't know. A 618 predicts a 1382. It's not an opinion. That's just what Fibonacci theory is. So that gives me an outline. Now, my opinion is we have support in the market, and I would be remiss to ignore it. Okay? So I would be concerned there, and, you know, only taking 500 or 600 pips out of this is so sad, right? Right? What a terrible sob story. So one of the things we were hoping for is if it did bounce there, you'd get an opportunity now on the beast. So you pull up the Widowmaker here and you take a look at opportunities. Okay. This is pointing down. Oops. Okay. So you can see the trade plan from the past. Down, up. This is a 50%. It says, based on Fibonacci theory, that somewhere between the 382 and 618 Fibonacci extension, right? The 50% says somewhere, the target is somewhere between these two lines. How accurate was it? It's pretty good, right? Right? Again, I didn't make that up. That's in my book that I wrote 7 years ago. Okay? So then what do? You sell the role reversal. Okay? Once it makes a lower low, you take the lowest low, move it over, and makes your new resistance line. So on and so forth. Did we make a lower low? Yes. Take the lowest low, make a new resistance line. So somewhere in the future, if it does this, I'm going to sell it. Nice. Notice that once this green zone is broken, right? Hang on, I messed that up. I grabbed the moving average. Come on. Sometimes this is difficult. There we go. So now you just need to make this rosy brown. Okay? And what becomes support is now resistance. So I'm going to get rid of this now. And, oh yeah, here's an interesting one. This bottom to the new high, roll reversal down to the 382. Yeah, 382. So it predicted a 1618 Fibonacci extension. It's not bad. Got pretty close. Right? Nice little pivot point theory going on. Or, I mean, Fibonacci theory. Right? Can you see it here? So you could even see that I drew it at the time. The higher high, look for a pullback. 382 predicts a move up here. Well, we only got here. Good enough for the girls I go with. So that hasn't worked out, but we'll see. So now, if you were a bull, which we might be, you need to measure this, okay? So what's the trade plan on this one? Up, down, up with the Stokes kicker. Okay? Because you're going to treat it like this. That it's going to make a series of higher highs and higher lows. Okay? Can you see it now? Just use your bionic eyes. Okay, PPI came out, negative 0.5. Negative 0.5. Wow. Not much inflation there on the producer level. Canadian jobs, negative 1,000. Better than expected. Yeah. Better than expected. They only lost 1,000. Woo, what a good day. Let's go back to our USD kitty cat. Look at that, huh? Okay. Can we assume or say that price reversed at the cluster? There's 2 pivot points in there, I believe. I could see something going on in there. think it might be a daily. Yesterday's got nothing for me. Oh, pictures that I want to see. In my book of memories. Okay, bulls are going to what? Remember? They're going to buy that, right? And a bear is going to want to sell that. Ooh, yesterday, we got nothing but me. Right? So a bull would be buying. Let me draw it again. A bear is going to do this. And a bull is buying the dip. And do, kind of like that. Always remind yourself in trading, you should understand what the bulls and the bears are going to do. So how do you feel about that? Canada only lost 1,000 jobs. Nobody? Nobody has an opinion on this? Yeah, no hard feelings, huh? That's okay. They're only Canadians. Who's that Rady? Yeah, but better than expected, right? Considering how bad oil prices are. I have family in the oil business that have been in the oil business for, I don't know, 50 years. One is since retired a few years ago. The other one was vice president of one of the largest oil companies in Canada. And his boss about a month ago said, "Hey, come to the office. I need to talk with you." And he comes in. "Yep, what can I do, sir?" "Pack your stuff up. You're fired. You're laid off. Here's 1 year's salary. Get the hell out. Oil prices are down 70%. You did a good job. Thanks for 40 years. Get the hell out." Yeah. Well, that's what happens. So, anyways, somewhere in there, in the Canadian statistics, is my uncle, a VP of a major oil company in Canada. Gone, retired. So the fact that only 1,000 Canadians lost jobs, I guess you need to be pretty thankful for that, huh? So yeah, my uncle took it pretty hard. He'll have to sell one of his 12 cars, downgrade to only a 10,000 square foot house, cut back on expenses. All right, so bears are winning this out. Typical scalp, just like what we do in NFP. Do, 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 do. So obviously, if you're a bull, you got to back yourself out now. We got a psych level coming up. That might be an interesting area for a bull. Okay. Isn't it interesting that we started the conversation today right off the bat? We looked at USD CAD, saw it rising, and what was the thing? You can't buy it, so the only thing we could really set up is a sell, right? Because you can't buy at resistance. This is resistance. All of this is resistance, right? Remember, psychological level, monthly pivot, weekly pivot? You can't buy it. So maybe you sell it. Now let's go through the logic. Would you want to, sell the U.S. dollar? You could. In fact, the U.S. dollar is weak right now relative to what it was earlier. But you could look at that and say, I would rather buy CAD yen than sell USD CAD. Right? You could go through that thought process. And still didn't work out that well. Now, I thought it would translate to a stronger dollar, this miss on PPI, because what it suggests is no need for the Fed to raise interest rates because of inflation if we have falling prices on the producer side, right? I mean, where are you going to feel inflation first? Consumers or producers? Well, on the producer side. Well, the number's actually down. Okay? So you might say, well, that's just falling oil prices. All right, so let's look at core. You take out food and energy prices, right? So now you're just looking at iron ore and stuff like that. Still a negative number. Where's the inflation? So that should say, well, no need for the Fed to raise interest rates. So I thought that would actually be dollar strength. So I'm glad I didn't blurt that out. It was actually quite a bit of dollar weakness. Which, if you were on the Canadian dollar trade, then you got lucky on that one. Because, yes, the dollar is strong. The Canadian dollar is strong. But at the exact same time, the U.S. dollar is weak. Cool. Now, the other reason we jumped on Kitty CAD is it was strong compared to the other commodity currencies, and now is even more. So why would you sell the CAD now if it's so strong? Talk to me, Mo. Oh, I'm never going to answer a question like that. That's you. You need to make a decision, right? I'm not your financial advisor, and I'm not your daddy. Well, it comes down to, for example, what do you think commodity prices are going to do? Do you believe oil prices are going to go up? Do you think gold prices are going to go up? Do you think nickel prices are going to go up? Do you think wheat prices are going to go up? Do you think beef prices are going to go up? Do you think diamond prices are going to go up? Do you think coal prices are going to go up? Thank you, admin. So I don't think so right now. As far as the commodities. So, yeah. By the way, is it yen or yen? Like a J or a Y? Jenny. All right, Jenny from the block. Yeah, all right. Um, it's like this. Fundamentally, nothing suggests that we've hit the bottom. Technically, there's nothing that suggests that we hit the bottom. So my spidey senses tell me we haven't produced a bottom yet. Right? So Boyke says, yeah, it needs a crystal ball. Similar to that, but I don't think we've hit a bottom. Like I was saying earlier, we have so much oil right now in the United States that there's nowhere to put it. And we're trying to stop the oil from coming out of the ground. There's so much of it. Like they may even need to stop producing oil. But, so it's just, they're just going to start dumping it in ditches or something now, right? So we got way more supply than we need. Well, let me finish this conversation in answering Boyke, because Boyke is the king of all FX Street attendees, asking the most astute question in the last 3 minutes. Why so much? All right. If you're in Saudi Arabia and you're walking through the desert and you find a new supply of oil, you say, hey, I think we should pull this oil out of the ground. It will take you millions and millions and millions and millions of dollars to set up the infrastructure, and it will take you 2 years. It's sort of like producing wine. You need a vineyard. Let's say you already have a vineyard, right? But you imagine if you didn't. You buy the land, then you got to plow it, and then you got to put up all the different rows of fences, and then you got to plant your vines, and that takes 2, 3, 4, 5, 10 years to get vines old enough to produce grapes. But let's say you buy a vineyard that already exists. Well, you got to plant the grapes, you got to harvest the grapes, you got to produce the wine, then it's got to sit in barrels for 2 or 3 or 4 or 5 years before you even get a chance to bottle it, put it in the stores, and maybe somebody buys it. I mean, it's a long time before you earn money, right? Well, in Saudi Arabia, if you decide, I'm going to pull the oil out of the ground here, you build the infrastructure. That takes 2 years before you can start putting oil into a barrel. Okay? So you got to do things like future value of cash and all kinds of analysis, right? But you got to put up millions of dollars today to potentially earn millions of dollars 2 years from now, right? All right. If you're in the United States and you have access to, shale oil, and you're in Pennsylvania and you say, oh, I've discovered some shale oil. You put up the rig, within 30 days, you're putting oil into a barrel and selling it. 30 days time to market versus 2 years time to market. So it's easy, technically. It's a technological revolution in which countries that have traditional oil supply just cannot compete. Why so much in the oil in the United States? Because we just suck it right out of the ground is anytime we want, and it's cheap relative. So now every idiot in the in the United States has got oil in his backyard, and they all want to produce. Okay, so way more supply than we need, and almost as much as we want, and it's cheap. So now in Wheeling, Oklahoma, there's nowhere to put the stuff. So we have so much oil, there's just nowhere to put it. So if we had a pipeline, we would suck the oil out, put it in the pipeline. By the way, the pipeline was never meant for the United States, so we'd move the oil to the Gulf of Mexico, and we'd ship it over to Europe. And then Europe cuts their ties with the Ukraine and Russia, because now they don't need Russian oil, which has to go through the Ukraine. And then that oil gets sold to Western Europe. So if people were smart, the United States and Canada would be shipping their oil to Western Europe and screwing the Russians. That's all I know about that. All right, for the second time today, peace on earth. May the pips be with you. May your profits be above average. What's it? Fracking harms it. Harms what? Oh, the environment? Yeah. I don't know. Who cares? Burn it all. We're all going to die anyways. Who cares? It's too late. We're past the tipping point. Just get an entirely too fast car with too small of a trunk with no back seat. Get yourself a big house you can't afford with a ridiculous sized TV, Boyke. Just get a huge TV that makes no sense. Put it on your credit card. Doesn't matter. We're all going to die anyways. If we have to like pollute a bunch, if we have to pour cyanide into the rivers, oh well, who cares? The fish are all dead anyways. Yeah, we're gonna move to Mars anyways. I think we should all move to Paris and kick the French out. It's been tried before, huh? All right, take care of yourself. In all seriousness, peace on earth. May the pips be with you. May your profits be above average, and may Mother Nature have a wonderful weekend along with you. Thank you for your loyalty, guys. I really appreciate it. Hope it helps. Bye.